How will your financial future look like? Ever wondered what could transform your economic destiny? As we traverse the journey of life, we often overlook the power of compounding assets. These are not just any assets. These are assets that have the potential to grow exponentially over time, making your money work harder for you. They hold the promise of shaping your financial future, not just by enhancing your wealth, but also by providing a safety net for those unpredictable rainy days. The world is full of opportunities waiting to be tapped. Each of these assets has its unique charm and potential for compounding wealth. Stay tuned as we delve into the world of compounding assets that could be your ticket to financial freedom. First off, consider business ownership. Now, when we talk about compounding assets, owning a business is the first thing that comes to mind. Why, you might ask? Owning a business is like planting a seed that grows into a giant tree. It's the power of compounding at its best. You start with an idea, you work on it, and with time, it flourishes into a profitable venture. Of course, it's not all sunshine and rainbows. Business ownership comes with its fair share of risks. Market competition, changing consumer trends, economic downturns. These are all factors that can impact the profitability of a business. But, as they say, no risk, no reward. Despite the challenges, business ownership provides an opportunity to create and control a compounding asset. You get to be at the helm of something that could potentially yield significant returns over time. Next up, let's talk about precious metals. These timeless treasures have been a cornerstone of wealth for centuries. Gold and silver in particular are not just shiny trinkets, but valuable assets, offering a wealth of opportunities for discerning investors. Imagine a scale with risk on one side and reward on the other. Precious metals, like a skilled acrobat, maintain a fine balance. They serve as a hedge against inflation, their value often soaring when economies falter. In periods of prosperity, they remain a stable store of value, rarely taking a tumble. Investing in precious metals isn't just about stashing gold bars under your bed, it's about buying mining company stocks, investing in exchange-traded funds, or acquiring rare coins. Each approach has its nuances, its risks and rewards. Gold and silver, platinum and palladium, they're not just elements on the periodic table. They're tangible assets, a solid foundation in the shifting sands of the financial world. Precious metals offer a safe haven in times of economic uncertainty. Now, onto a less tangible but potentially valuable asset: intellectual property. This category of assets includes patents, trademarks, copyrights, and trade secrets. They may not be physical, but they hold immense potential for wealth creation. Imagine owning the rights to a groundbreaking innovation, a catchy phrase, or a best-selling book. The royalties from these can provide a steady stream of income over time. Furthermore, the value of intellectual property can skyrocket with the success of the product or service it's associated with. Think about the most successful companies today. Many of them have a treasure trove of intellectual property that contributes significantly to their overall worth. It's not just about owning things. It's about owning ideas, creativity, and innovation. So, while it might not be as straightforward as buying a piece of land or a bar of gold, investing in intellectual property can be a game changer. Ever thought about investing in real estate? Well, it's time to consider it as a compelling compounding asset. Real estate is more than just buying a house or a piece of land. It's about understanding the market, assessing the value, and making strategic decisions. When you invest in real estate, you're looking at two types of returns: rental income and appreciation. Rental income is the monthly or yearly return you get from leasing your property. It's the steady flow of cash that keeps your investment afloat and can cover the costs of property maintenance and mortgage payments. Appreciation, on the other hand, is the increase in the property's value over time. It's like a silent partner in your investment, working in the background, gradually increasing your wealth. And the beauty of it? You don't have to do anything but wait. Real estate is tangible, it's solid, it's beautiful, it's artistic from an investment point of view, and it just feels good. I hope you're enjoying the video. Please like and subscribe for more investment tips. Let's turn our attention to the stock market. Stocks, also known as equities, represent ownership in a company and a claim on a portion of that company's assets and earnings. When you invest in stocks, you're essentially buying a piece of a corporation. The beauty of stocks lies in their potential for high returns over time. The stock market has historically outperformed many other investment types. Yes, it can be volatile, swinging up and down on the breeze of economic news. But remember, with higher risk comes the opportunity for higher reward. It's all about buying low and selling high, right? Well, not quite. Successful stock investing also involves understanding market trends, company performance, and economic indicators. It's a game of strategy and patience. Investing in stocks is not for the faint-hearted. But if you can tolerate the risk and stay the course, it can be a powerful compounding asset in your wealth-building arsenal. While volatile, stocks offer significant growth potential. Looking for something a bit safer? Consider bonds. Bonds, my friends, are essentially IOUs. When you invest in bonds, you're lending your hard-earned money to a government or corporation. In return, they promise to pay you back with interest. It's a win-win situation, really. Now you might be thinking, that doesn't sound very exciting. And you're right. Bonds are not the most thrilling investment out there. They're not going to double or triple your money overnight. But guess what? That's not always a bad thing. When it comes to investing, consistency can be just as valuable as large gains. And that's exactly what bonds offer. They provide a steady, predictable stream of income. You know exactly how much you're going to get and when you're going to get it. So while bonds might not make you a millionaire overnight, they can certainly help you build and preserve your wealth over time. Bonds may not be flashy, but they provide steady and consistent returns. What about mutual funds? Now, that's a question worth exploring. Mutual funds are a grand spectacle in the investment world, and for good reason. Imagine a basket. Now, fill this basket with a variety of financial instruments like stocks, bonds, and other assets. That's essentially what a mutual fund is. It's a professionally managed investment fund that pools money from many investors to purchase securities. The beauty of mutual funds lies in their diversity. Instead of putting all your eggs in one basket, you're spreading your investments across a wide array of securities. This helps to manage risk while still providing a return on investment. But there's more. Mutual funds are managed by financial experts, people who eat, sleep, and breathe market trends. These professionals do the heavy lifting, researching and analyzing market conditions to make informed investment decisions on your behalf. So, why consider mutual funds? Mutual funds offer a managed and diversified approach to investing. They're a smart way to build wealth while keeping risk in check. Next on our list is exchange-traded funds, or ETFs. Now, if you're looking to dip your toes into the world of investing, ETFs could be your perfect starting point. They offer an easy and accessible way to invest in a broad market sector or index. Imagine owning a small slice of every company in a particular index, like the S&P 500. That's what an ETF can do for you. It's like having a mini portfolio that mirrors a specific market index. And the beauty of it is, you can buy and sell ETFs just like individual stocks, right from your brokerage account. ETFs can also serve as a powerful tool for diversification. Instead of putting all your eggs in one basket, you can spread your risk across a wide range of companies, sectors, or even countries. So, whether you're a novice investor or a seasoned pro, ETFs provide a simple and effective way to diversify your portfolio. Ever considered investing in farmland? It might seem a bit unorthodox compared to other investment avenues, but hear me out. Farmland is an exceptional compounding asset, with the potential to yield a twofold return. How so? Well, first and foremost, farmland provides a steady stream of income from the crops it produces. Whether it's wheat, corn, or soy, these crops are always in demand and provide a reliable income. But the beauty of farmland doesn't stop there. Over time, the value of the land itself appreciates. This means that while you're earning from the crops, your initial investment is also growing. And the best part? Farmland is less susceptible to economic downturns compared to other assets. It's an essential resource that we'll always need, making it a stable investment. So if you're looking for an investment that provides both income and capital appreciation, farmland might just be the answer you're looking for. Farmland can be a stable and productive compounding asset. Now, let's venture into the world of Forex. You might be wondering, what is Forex? Well, it's an abbreviation for foreign exchange, and it's the marketplace where currencies are traded. It's a bit like a global, decentralized market for trading the world's money, where the euro, the dollar, the pound, and the yen all meet up to do business. Forex is a fascinating compounding asset because it allows you to profit from the fluctuations in the value of different currencies. But remember, with great potential comes great risk. The Forex market is notoriously volatile, and currency values can swing wildly in response to economic news and geopolitical events. So if you're considering Forex trading, be sure to do your homework. Understand the factors that influence currency values and have a clear strategy in place. It's not for the faint-hearted, but for those who can navigate its choppy waters. Forex trading offers the potential for significant returns. Forex trading can be risky, but offers high potential returns. Finally, let's explore renewable energy projects. It's no secret that our world is shifting towards renewable resources. This is not only a necessity for the preservation of our planet, but it also presents a unique investment opportunity. Renewable energy projects, such as solar farms, wind turbines, and hydroelectric plants, are becoming increasingly prevalent and profitable. These projects offer the potential for consistent long-term returns as the demand for clean energy continues to rise. Moreover, investing in these projects allows for diversification of your portfolio, reducing the risk associated with traditional assets. But perhaps the most rewarding aspect of investing in renewable energy projects is the positive impact on the environment. It's an investment that not only grows your wealth, but also contributes to a sustainable future. So if you're looking for a compounding asset that offers financial growth and aligns with global sustainability efforts, renewable energy projects could be the perfect fit. The common thread among all these assets, they're compounding. They're vehicles that can multiply your wealth over time, amplifying your initial investment. They are the keys to financial growth and stability. And remember, diversification is your ally. Don't put all your eggs in one basket, but spread your investments across different assets. So, take a moment. Reflect on what we've discussed today. Which assets resonate with you? Which ones align with your financial goals, your risk tolerance, your timeline? Remember, your financial future is in your hands. Make the right investments today for a prosperous tomorrow. Don't forget to like and subscribe for more content like this. I will see you in the next video.